conference. This one is covering venture capital firms that are actually based in emerging markets themselves. So we have Phillip Sebole Masango, who's the founder of Black Silver Capital in South Africa, which is actually one of the largest VC in the continent of Africa based on deal size. Leon John Hermann, the venture partner at Kejora Ventures, which is in Indonesia. Denis Lambert, managing partner and founder at Maenhir Partners in Vietnam. And Kartikeya Shekhar, who is an investment professional at Blume Ventures, which is also one of the largest VCs in India. So I will let you guys introduce yourselves and tell us a bit about how you got started on your fund, what you do, and why you're investing in emerging market countries. And Leon can go first.
Yeah, absolutely. Thanks, Nick, for the warm intro. I think we're now in the last session of your emerging market conference. Yeah, so I hope you guys are not too tired yet. Yeah, energy levels still high. Wonderful. That's great. Okay.
Still going strong.
Yeah, that's how it should be. Okay. My name is Leon, based out of Indonesia, but I'm German myself. I consider myself sort of German by passport, but Indonesian by passion. I actually, though, started off building internet companies together with Rocket Internet in Russia back in 2011, moved to Indo in 2015 with Rocket, started investing then end of 2015 with Global Founders Capital, deployed in companies like Traveloka and some other B2C and B2B facing companies, primarily in Indo. Then moved for a while to 500 startups, managing 15 different funds all across from the Middle East to Japan to Bangladesh to Latin, before figuring out that the opportunity cost of such a global exposure was significant, which is to really miss out on Southeast Asia. And to miss out on, so I wanted to go back to Southeast Asia, and it's sort of, for me, it was very clear, if you want to do Southeast Asia well, there's no way around being based in Indonesia, full stop. I'm working with a firm called Kejora. We have about 400 million in assets under management across 4 funds, one of the largest VCs in the region, about 35 portfolio companies. But pretty much, so we invest everything from 500K US up until about 25 mil. What really sets us apart to other investors in the region is that we rather take meaningful minority positions in the companies that we back, targeting equity of about 20% plus per company when we do early stage. And we sort of really looking to value creation post-investment also by connecting relevant portfolio pieces together. So when I joined, I was responsible for launching the 4th early stage fund, did that, launched it successfully a couple of months back together with SBI Holdings from Japan. It's a $30 million early stage fund focused on Indonesia. And apart from that, working on some other stuff with the firm. So that's in a nutshell. Really looking forward to the session and a pleasure meeting you all.
Great. Yeah, great intro, Leon. And Phillip, why don't you go next?
Oh, hi. I hope you can hear me because I am a little bit loud. But just bear with me if you can't hear what I'm saying.
Sure.
My name is Phillip. I'm the founder and CEO of Black Silver Capital, which is a very interesting one. Because when we talk about emerging markets, I'm actually in one of the developing countries. As you might know, that South Africa is a developing country with a lot of opportunities. So our focus is not only to invest in tech startups like most of the VC firms and private equity firms around the tech hub of Africa, which is Stellenbosch and Cape Town, but we set out ourselves into a venture where we do not restrict ourselves to industries, sectors, and specialties. So we're actually one of the first VC firms out of the whole country that we put ourselves down to a point where we can invest in the small medium enterprise, due to the fact that our economy is mostly backed by small medium enterprises, not only the tech firms. And over the past few years, the industry has been growing very well. That I'm actually proud of it. I'm actually very excited every day when I go into meetings and then I get to talk about how amazing the Cape Town tech startup is. And I was in a meeting earlier with Nick, and we were just talking about how can we represent the South Africa as a country and how the tech ecosystem is, and how underrated it is, because most people don't actually know about it and the kind of opportunities that are there. But I'm really excited to be here to come and talk about it, and then so that you guys can also learn about what we do here. We're not a bad country after all. We really focused on development. We really focused on giving others opportunities. And I work with a lot of startups. I have a business and corporate consulting firm. I have a marketing agency. I have an accounting firm. I go a lot into tech, into bionics and space exploration. In my lifetime, I've mentored over 100 startups, which is a very exciting one. And since I might be based in Cape Town, but I've worked with entrepreneurs from all over the world, which has been an exciting journey for me because every day I have to be up around 3 a.m. to have a meeting with a guy from Singapore, so which is really exciting because the internet allows us to connect instantly from anywhere. But overall, over the past few months, it's been actually exciting to see a lot of entrepreneurs adopting to the fact that you can take advantage of the online platforms that we have. Um, doesn't matter if you live in a place where there's no infrastructure, you can always try and network with entrepreneurs from all over the world. And yeah, that's it. I'm just excited. I won't go into detail. I'll just toss the ball to anyone who's willing to catch it.
Sure, great. Kartikeya, why don't you go next?
Sure. Thanks, Nicholas and Frederick and the rest of the team for having me. Always excited to be back at INSEAD. So I graduated actually a few years ago. I'm an associate at Blume Ventures. For those who don't know, Blume basically is a very early stage tech fund in India. We started out actually in 2010, 2011. So we were the first batch of homegrown funds out of India. We come in very early, so it's seed to pre-series A, completely sector agnostic. So we've done everything from space tech very recently to ed tech, grocery delivery, everything you can think of. The only one sector we try and not do is sort of consumer brand products. Apart from that, we touch everything else. It's a super exciting time. We have offices in 3 cities across India, large team growing every day. And I'm excited to be on this panel and share notes and answer any questions that everybody has.
Sure, and finally, Denis, you can tell us about the work you do in Vietnam.
Hi, Niklas. So yeah, my name is Denis. I'm based in Vietnam. I've been in Asia for the past 13 years. I've been living a long time in China, mainly between Shanghai, Taipei, and Hong Kong. So I moved here about 1.5 years ago. I'm running a consulting practice called Maenhir. So what we do in Maenhir is we started on a problem we identified in misalignment from venture capital toward company invested. And we identified that many investments from VC firm could be improved. For many reasons. Some of the reason is because when you see private equity doing investment and VC doing investment, you can see that there is a huge gap between, I would say, the efforts they do in those investments. And also another phenomena, which is very interesting and which is actually a topic I'm doing research on as a PhD student, which is that some people in startups are very good at doing fundraising, but are not very good at being entrepreneur. It's a very interesting phenomena because we have seen in the past here that VC firm can burn a lot of money on really bad projects, and there are ways to identify those weaknesses. So basically, this is what we try to achieve in Maenhir venture capital.
Great. And so yeah, I think all four of you have spoken to this a little bit when I asked you to introduce yourselves, but I guess this is a two-part question I'll ask is, first of all, why did you choose the country that you're working in now, and what excites you most about that country? And then secondly, what challenges have you faced? Because I think all four of you are starting venture capital firms in countries where the industry is very nascent. And so, yeah, I guess Denis can start out with this one.
So very good question. So yeah, one of the reasons I moved to Vietnam is because like I really enjoyed to be in China about like 12, 15 years ago and see like a vibrant country growing very quickly. So of course, like China is not growing as fast as before. So I thought Vietnam could be a good place to see the same kind of growth. So that's the first motivation why I came here. I was primarily interested in the startup economy here. So I started to study the startup economy here, but like almost like 3 years ago. So it was quite interesting because 3 years ago was a very small startup scene in Vietnam. And then it's growing. It's still not very big, but once again, it's always the same constraint or the same trade-off. Like, well, do you want to go in a easy country where it's very easy to identify good projects, but then you have a lot of competition, or do you want to go in a country where it's quite difficult to identify good project, but then there is no competition. So that's the trade-off to find, and that's the exciting part of it. I would say like Vietnam has all the characteristics of a nascent and emerging country, but still like few characteristics that I didn't foresee here. And as a matter of fact, the cultural gap, I would have been expecting a lot of similarities with China when I came here, but actually it's a quite different market. And for many reasons, China has been able to build a lot of infrastructure and logistics very quickly at early stage when it's not there yet in Vietnam. So it's giving a lot of difficulties. Also, something very interesting in Vietnam. I don't know if you guys read these things called like Startup Genome, but they do some ranking by country in terms of like entrepreneurial capabilities. And what we see is that Vietnam is number 3 in the world. Vietnam is number 1 in Asia for this entrepreneurial spirit. But once again, like it's not because you have entrepreneurial spirit that you're good at making startups, and being an entrepreneur is 2 different things. So it's very vibrant because you see this thing like everybody wants to do something, but in practice, like not so many are successful. So I would say that the constraints today of Vietnam is like a lot of people are attracted by this country. It's not necessarily in the startup economy. It's the same for SMEs or big company willing to do like greenfield or whatever. And it looks very attractive on the paper, but there are a lot of pitfalls, and it's a very complex market, I think. Yeah.
Sure. Great insight. So I think I'll move to Leon next. Indonesia's kind of the star of Southeast Asia when it comes to VC funding, but I'm sure there are a lot of challenges there. So would love to hear your perspective.
Okay, let's go. So let's look into the past. And let's look into what have been the underlying macroeconomic factors for really significant and massive growth. If we look into Japan in the 50s and 60s, if we look into Korea in the 60s or 70s, or China in the years of 2000s, as Denis rightly pointed out, those were the times where those markets were in the brackets of GDP per capita between $4,000 to $8,000. And in fact, what is proven by research is that when these countries are within that GDP per capita bracket, this is where a lot of value creation has happened. More than 50% of today's public stock market values in Japan and Korea emerged during that time. Some of the leading global conglomerates have been built during these particular periods. Indonesia is going through that exact period right now. And for the next 10 years, it is presumed to have incredible growth ahead. Why Indonesia and Southeast Asia? Southeast Asia is not like the European Union or other markets globally. It is rather fragmented, and you have to choose your first market wisely. And while Vietnam is, of course, receiving a lot of attention, Vietnam's GDP is at about $300 billion a year. Indonesia's GDP is at about $1 trillion per year, with a population 2.5 times of what we have in Vietnam. We fundamentally believe that if you want to build a business from day one, you better choose your first market wisely. And that should be the market that contributes 50% to Southeast Asia, and that is Indonesia. So that's essentially the reason why I'm here and why I believe Indonesia is the best starting point for Southeast Asia. Comparing that to India, India is of course very exciting. India has a massive population, but if we look into and dissect it into detail, then GDP per capita levels are much lower compared to Southeast Asia. It is oftentimes harder to scale across the entire population there. If you look at entire GDP of Southeast Asia versus India, then in fact, Southeast Asia has more GDP than India, and it's a bigger opportunity. In terms of venture capital, though, Southeast Asia is underinvested. It is only, as a share of GDP, it is only half or a quarter of what India has in terms of GDP and VC penetration. Yeah, and I think last year about 18 billion US invested in India ecosystem, only about close to 10 billion invested in Southeast Asia. So long story short, GDP per capita levels are poised based on past data for significant growth. Number two, Indonesia is the key market in Southeast Asia to look into. That's why we start here. And yeah, number three, I'm just very much in love with Indonesia food, and it's just very, and culture, and it's amazing. Yeah.
Definitely agree with you on the food. And I think you gave a lot for Kartikeya and both Denis to respond to. So I'll have Kartikeya start.
Yeah, let's put some energy in here.
Yeah. Awesome. No, thanks. So India, I think, so India's VC ecosystem is fairly new, right? Only started really in 2008 compared to the US, which was 1970s, you could argue. But it's super exciting, right? Multiple reasons. I think Leon spoke about some things, right? Massive population. So 1.3 billion people. You have over 500 million people on smartphones today. Data costs after Geo came in have plummeted, right? So it's about 26 cents per GB, which is insanely low. You have some amazing tech talent here. And what excites us is there's so many problems to solve, right? So while GDP per capita obviously is about $2,000, and I completely agree with Leon that you need to get to 4,000 for really cool things to happen. But that's what excites us, right? There's so much room to solve such massive problems. And every niche in India is so large that you can theoretically build a large business. And so for those reasons, it's super exciting. And let's remember that the ecosystem is maturing. So the quality of founders goes on increasing every year, right? Because people who were at Flipkart or Ola earlier are now leaving to start their startups now. So for multiple reasons, India, I think, is one of the most exciting VC ecosystems today. In terms of the challenges, I think a few, people, when you think of India, have to remember that it is so diverse, right? So scaling from one region in India to another is similar to scaling from one country to another in many cases, right? Because of language differences. Customer loyalty tends to be a little low in India, right? Which is why a lot of startups have been funded through cashbacks, etc., which are not sustainable. So founders need to keep that in mind. India, unfortunately, hasn't seen the level of exits that we would like for this kind of funding and founders to materialize, right? So we'd love to see some more exits, and our belief is that you'll see many more exits from India in the tech space very soon. And last is this GDP per capita is still pretty low. So those are the four sort of challenges, but many more pros and many more opportunities than challenges, and it's a super exciting place to be, which is why Blume is solely focused on for India at the moment and will continue to be for the foreseeable future.
I'm not sure if Denis wanted to say something, but if not, we can move to Phillip. And yeah. Okay, yeah. So yeah, Phillip, you can tell us about the Cape Town ecosystem itself and VC in Africa as a whole. Is I think a lot of people don't know a whole lot about about startup on the continent.
Thank you very much, Nick. Where do I start? So I'm just gonna start with why did I choose to be established in South Africa, starting, or let's say Africa, and especially Cape Town. When I first learned about the startup ecosystem here, I was amazed. I could see, I worked in a lot of co-working spaces, which is one of the major contributors to the success of startups here. And I've seen how we have a lot of entrepreneurs that have groundbreaking ideas. And then most of the time, the challenge they have is seed funding. So I don't believe venture capitalists are bad, like our economy does portray us. I believe that we give people chances. And I believe that we only invest in what we think matters. We only invest in what we think is going to have impact, besides generating profit. So my initial interest in the VC industry was not to monetize, but to also try to give entrepreneurs opportunities, because my philosophy is I'm always striving to make the world a better place. It doesn't matter if I'm trying to monetize on it or not. And because I've worked with a lot of startups, and some of them have really great ideas, and then they can't get the chance. And when they try to get offshore investors, no one is familiar with the market. Everyone is trying to like, we know South Africa is like a growing country, and there isn't a lot of infrastructure, there isn't a lot of opportunities. So instead of, because I've had that similar experience, back in 2017, I was starting a tech company, and then I wanted investors. So what struck me was I was not looking locally. I had to go to Europe to look for investors. And I was like, but we have people, we have a lot of millionaires. I don't want to lie, in South Africa, which is something that a lot of people are not aware of. Our high net worth individuals are more in South Africa than the rest of the continent. So if we look at the angel investors and the private equity firms, there's also more of them in Cape Town than in the rest of the continent. But when we start tech companies, we go to Europe and America to look for investors. And most of the time, the only two interests they have, they want to invest in the software companies, and a software company doesn't necessarily hire a lot of people. If we talk about GDP, I've learned that most of the small medium enterprises are the ones that contribute a lot to our GDP, especially when it comes to looking at the underrated markets that we have. So I gave myself a task. I was like, okay, if I could find it easy to connect with startups, then I can find it easy to give them opportunities. And that sometimes only comes through collaborations, because I know most of you know that most companies depend on collaborations today to reach out to more people, to reach out to more clients, to reach out to more customers. And collaborations have been trending for a while now, and they have a major impact when it comes to raising funds. For example, in a VC firm, they have a lot of impact when it comes to reaching out to more startups and getting to know about their ideas. But I don't believe, again, that venture capitalism is something that is only focusing on those who have access, because one of the trends that we have to a lot of articles that I've read, especially in South Africa, about the VC industry in South Africa, is that sometimes you can only get investments if you have the connections. And that's not necessarily true, but my task was to also give access to the startups and small medium enterprises that didn't have access for the past 20 years. We've seen how the last two industrial revolutions have been. We see how this industrial revolution has a lot of potential when it comes to providing services and creating tools and services and providing access to most of the businesses that were not served in the past two industrial revolutions. And I think today we don't have to focus on one aspect of the industry, especially in a growing economy like our economy in South Africa. We have to be abroad. We have to focus on the other economies that are underrated. For example, Cape Town is a really, really startup ecosystem. We have fintech. A lot of our fintech sector is one of the fastest growing in the continent. We do agri-tech, we have educational technology, we have a lot of software companies. And what's interesting is for the past 5 years, Amazon is one of the first companies out of the whole world to really invest in the startup ecosystem of South Africa, especially Cape Town. Microsoft, Google, I've seen Tesla. Tesla has been collaborating with a lot of local organizations. And I've seen Nespers, which has also been investing a lot into trying to solve the current problems that we have. But I also believe that there's more that are coming, but It's just a matter of telling people about it, you know. And
Definitely, yeah.
I'm really excited about the next coming years because growth is always there, and how we address issues. Sometimes we address issues by investing in ideas. It takes one person to believe that this idea can work. It can someone can monetize on it.
Definitely.
And some
So
of the struggles that we have in our country, the challenges that we have, the economic challenges that we have, we sometimes can only solve them. It's not a matter of me going outside looking for investors. If I can get a group of 100 angel investors, they can invest in a startup. So sometimes the only way we can have a really functional startup ecosystem, especially the tech industry, is by being inclusive, you know, is by focusing on the underrated sectors that we have. I mean, like, you know what's trending in the VC industry? Most of you work with a lot of tech startups, especially if you're in Asia or you're in North America. You go to Silicon Valley, everyone wants to invest in the tech startups. But we tech startups can hire a lot of employees, but they're not the backbone because they are service industries. We need to also invest in industries that involve manual labor, for example. Those are the ones that contribute a lot to our GDP. And
great.
actually, it's been interesting following Jack Ma in China, trying to solve the problem of farmers in the rural areas of China, trying to find a way to get them to participate in the market and sell their produce with online apps and all that, the e-commerce industry. Because he also understands that we buy a lot of from China. I'm very sure every country does because the workforce the industry allows people to familiarize with the market in China. We buy a lot of stuff from China.
Sure,
And
Philip. So I think, yeah, we're gonna move on to the next topic, but yeah, it was very interesting to hear about the ecosystem in South Africa, especially the focus on different industries, including fintech and so on. I'd love to learn more about which sectors the rest of you find interesting in your countries. And I think, Philip alluded to this a little bit. I know that, technology itself can transform these economies. So I'd love to learn more about sectors you find most interesting, as well as particular startups that you've worked with that you really enjoy. And so Leon can start this one off.
Okay. Look, like 2012 total VC investments in Indonesia less than 100 million US dollars. Last year, total VC investments in Indonesia about 5 to 6 billion US dollars. Usually, technology ecosystems emerge by starting with commerce. Then there's fintech coming. Then there's at one point these sort of enabling technologies and infrastructure pieces that are being built on top of or below that, in fact. So oftentimes it starts with B2C and then it moves more towards B2B and B2 or B2B2C companies. Now, what we're actually most excited about at Kejora is the entire B2B or micro SME space. Why is that? In Indonesia, GDP contribution of small and medium-sized enterprises is at about 65% on total market. However, if we sort of fragment that further, we figure that about 300 billion US dollars, or half of the entire SME contribution, comes from long-tail micro entrepreneurs. So these are about micro businesses that do less than 200K US dollars per year in sales. This is in fact very, very similar to what we see in India in terms of, in India, we have the Kirana stores. Here in Indonesia, we have the warungs. Yep. Yeah, the long tail of micros is exactly what's been playing off in India over the last few years. So we like a lot that has to do with enabling these entrepreneurs in any way to sell online. And we have a lot to learn here, in fact, from India. And we look very, very close to what's happening in India, about 2 to 3 years ahead of ours. Katabook and other fintech players to manage finance started off 2 or 3 years ago there. Now we have, say, the Buku Kas, Buku Warungs in Indonesia. logistics, Black Buck, and all the others for trucking started off already massive rounds by SoftBank. Now we see exactly the same happening here, also with our portfolio raising massive growth rounds. So we see a lot of enabling these micros to sell online happening, and in terms of where we learn from India. So I'm really excited about what you're saying, Kartikeya, in terms of what you see on the ground in India, because we're here to learn from you.
Oh, I can go. Thanks for that, Leon. I think I completely echo it, right? I think we are super excited about the small and medium businesses. We have 60 million of these SMBs, as we like to call them, which are really the backbone of our economy, I guess, similar to Indonesia. And everything that's helping digitize them in whatever way possible, right? I mean, the great thing about India is like nothing is not exciting to some extent because it's just such a big market. So really, there's so much interesting stuff to do. Particularly, like what we are excited about at Blume is helping digitize these SMBs. So we've made a few investments in the space, in the Kirana space as well. And then there's a large population in India which is sort of underbanked and underrepresented and underprivileged, right? And so whether it's fintech to these consumers, whether it's helping them get hired, the blue collar workforce, that's a massive untapped opportunity, right? Gig workers, etc. And then D2C brands, right? While we don't invest in them, I do think over the next 10 years, there'll be some very, very large brands that will emerge from India, which are homegrown. And then EdTech, so we have an academy in our portfolio that just became a unicorn, and they're doing incredibly well. And there's so many other opportunities. We had White Hat Juniors in India, not our investment, but again, they've done incredibly well, managed to scale globally through a coding platform. So we're seeing a bunch of exciting areas, whether it's EdTech, FinTech, retail tech, Kirana tech, anything that's helping digitize SMBs. So really, really exciting things happening.
Great, and we have a follow-up from the audience about India and I guess Southeast Asia in general. Ashish's question is: a lot of large VC-backed firms in both India and the Southeast Asian region, such as Gojek, Grab, Carousel, are far from achieving sustainable unit-level economics. Do you think any of these firms can actually become profitable in your future in IPO, or would consolidation be key to allow exits for their early stage investors? And Kartikeya can go ahead with this one.
Yeah, I think what happened over the last few years was a lot of companies that perhaps should have focused a lot on sustainability and unit economics got access to very large amounts of private capital, right? Which sort of made them lose focus to a certain extent on what was important, right? And they're paying the price now. But I do agree that to eventually go IPO, you will need to focus a lot more on unit economics and at least show maybe not profitability, but a definite path to profitability. So at Blume, we like to meet founders who may not know exactly how they are going to monetize today, but if you can help explain a path that is logical and that makes sense to both the founders and to us, then those are the kind of investments we like to make. So I don't know if that answers the question, but to answer your question, yes, there will definitely need to be, and there is already, like if you look at all the large unicorns in India, everybody is talking now about profitability and unit economics, right? Because of what's happened with the SoftBanks of the world. So yeah.
Yeah, maybe I can add on here to that. I'm not able to comment on Zomato too much. I think Kartikeya is much more expert on that particular company. But look, like for us, actually cash flow matters. And we're not just about top line, but we're also big fans of bottom line here. Yeah. So our portfolio companies, many of them are EBITDA or even net income profitable, but still able to grow 300% year on year in terms of their top line. So we like that. So we're looking from the beginning. For us, actually, maybe we were also investing early, but we still want to have a very, 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 very clear path to monetization and path to profitability. That doesn't mean that from the get-go you continue to have to stay profitable, because at one point in time you got to invest in order to grow. But there should be a very clear or close path to profitability at all times. Now, with all of these large companies that we see here, I mean, look, Gojek and Grab, there's so much consolidation conversations happening, pushed by shareholders, obviously, because they're burning hell lots of money. Yeah, and so it's just about a power play here. That's why they're not able to consolidate yet, but for sure I'm pretty sure something will happen. Carousel is everyone's darling. Everyone loves Carousel, but if we look into revenue multiples and how they're valued based on their last round, I'm like, I would stay away from that deal, and I hope no one here invested in that company. So yeah. So maybe some strategic might buy, but generally we see, I think, a shift now from investor side as well, that it's not just about the top line, but it's also what's happening underneath in terms of unit economics.
Great. You're getting some compliments on your laugh.
Oh, thank you so much. I also see a lot of LinkedIn invitations already. So thank you so much for those. I really look forward to making friends with all of you.
Sure. And then I guess Denis can go back to the original question and answer which sectors are most exciting to you in Vietnam, as well as some of the more exciting startups that you've worked with out there.
Which is not that far from the latest question, but yeah, I would say what is trendy in Vietnam is a bit the same as everywhere, but Vietnam has some specific constraints. So what is very trendy nowadays is like what we more or less said previously, like anything far away from e-commerce, because like it's a bloodbath and it's burning cash like hell. I will say, like, yeah, more generally speaking, especially tech startup, I think we need to redefine what is really technology, because once again, build an e-commerce platform has nothing to do with technology nowadays. So this is a very important thing. And what I see trendy in the future and a bit worldwide is like more things like IoT, more things like related to robotics or things like that with like physical technology. Which is a problem for Vietnam, because Vietnam has a very limited technology and innovation, and this is really a constraint. So e-commerce, just forget about it in Vietnam. It's terrible, it's a bloodbath, it's very complicated because they have huge logistic issues in the country. They have like 90% of the population which is unbanked, so basically e-commerce is mainly done on cash on delivery, and it's a nightmare to manage. So let's forget about that. Based on what I just say, fintech has opportunities for sure. This is clear, but it's a complex matter because there is no clear regulation on the topic. And if you want to have a fintech license, you need to know the right people and to be in connection with like a powerful family in the country. So for sure, it's a promising segment, but then you need to know those people. And once again, if you know those people, actually, you don't really have a problem to do business in Vietnam. So the whole vicious circle here. What I see growing and I see very interesting nowadays in Vietnam is anything related to medtech. Could be up though. I think like some of the big guys in Vietnam want to push Vietnam to be similar to Thailand in terms of like a medical tourism. So a lot of things to do around that. I see, and I'm helping Indian company also coming in Vietnam to have like small IoT devices to check some very simple disease in remote places to reach a consultation of $1 per person. And those IoT linked to medical is definitely a trend here, but also in the region. And the last thing, which is like very, very specific to Vietnam, is Vietnam is having one of the lowest ratio in terms of processed food, when actually it's a very big food producer. And this is very interesting. So that's great for us here because we have access to fresh food all the time. But on the other hand, it means that this part is very limited. And once again, if you see entrepreneurship and if you see innovation based on potentially matching existing technology to untapped market, then Vietnam is a place. And I think this one is a great win for whoever is coming with like food processing technology to Vietnam to export it. It's a great thing, I think.
Yeah, I would love to comment here, and I'm sorry, I might be a little bit the antagonist now.
Okay.
Because I believe where there's problems, there's opportunities. And so here's a thing. Southeast Asia, and that is be it Vietnam or be it Indonesia, is not like China in terms of e-commerce. In China, you have basically Taobao and JD taking up 80, 85, 90% of market share, and they basically build everything by themselves. So of course, it's very, very, very tough for any new incumbent to go in there and to take meaningful market share. At the same time, if we look into Southeast Asia, it's more fragmented. You have, let's say in Vietnam, you have the Lazada, you have the Shopee, you have the Sendo, you have the Tiki. In Indonesia, you have the Lazada, the Tokopedia, the Bukalapak, and Blibli. And all of these guys are backed by very, very powerful investors that are very, very well capitalized in order to invest in these companies over the next 5 to 10 years, continuously be able to invest. That means I have a more fragmented B2C space. And I still, on the other hand side, have merchants that want to sell on across every single platform, but they might not have the tools or products available to do so. So while I completely agree with you, Denis, that it probably is not the right time to build a general B2C e-commerce marketplace, at the same time, I can look at technologies to enable more commerce to happen, number one. Number two, we're not just talking about, Indonesia particularly is very interesting. The share of social commerce, meaning commerce going through Instagram or WhatsApp instead of the large e-commerce platforms, is at about 30% on total e-commerce GMV. And here it's a completely different way in the way I acquire customers, the way I retain customers, the way I build my platforms. Particularly, again, I would love to learn also hear more from you, Kartikeya, from India. We see new commerce models emerging because of this is the way societies work, because they are like communities, reseller platforms like Misho, like Glow Dark, and so forth, from C2C. Is very exciting to observe there too. So while business model innovation and B2C commerce might be tougher to crack, and indeed is quite of a bloodbath, it's more about how can I either enable technologies to help these merchants sell across platforms, or I figure out entirely new distribution channels. So opportunities are far from over in the e-commerce space as well.
Great. So in past sessions, whether it was asset management, where they were talking about how a lot of these frontier and emerging markets have actually weathered COVID much better than developed countries, or in our first sessions yesterday, where there were mixed results. Some of the smaller VC firms were struggling with fundraising, whereas the large ones were having their best years ever. My question would be to all of you: how has COVID impacted your country, your portfolio companies' performances, and what effect you have, what effect you see it having going forward? And Kartikeya can start with this.
Sure, I'll start with a portfolio impact first. So look, I think I'm guessing this is sort of fairly consistent with most VC funds. I guess it depends on the sector, right? So the companies in our portfolio, which was sort of in the sharing economy, whether it was ride sharing, co-working spaces, obviously were negatively impacted. Luckily, a lot of them had raised funding last year, or were able to raise some sort of bridge / debt financing. So they ended up fairly okay. But we've been lucky. We've always been early stage tech fund, and so we've invested heavily in sort of ed tech. So Unacademy in our portfolio has done extremely well during this time. We have a company called Dunzo, which is in the grocery delivery space. As you can imagine, people are sitting at home, and now for the first time they've taken to ordering groceries online. So they've done really well. We have a company in our portfolio that helps, to Leon's point, any small business, think of them as the Shopify for India, essentially. So they've done extremely well. So we've had a bunch of successes in sectors which have seen COVID tailwinds. So on balance, I think our portfolio has come out stronger than we were pre-COVID. And in terms of sort of country, look, I think any large asset manager globally, when they think about venture capital, considers India quite favorably, right? Given the opportunity and the ability to raise capital. Obviously, exits are still a question mark, but in terms of where VC funding dollars should go, I think India still ranks amongst an area where opportunities lie. So we've, I think funding is, you've seen new startups emerge and you've seen them get funding. Obviously, valuations have been impacted a little bit, but for the right founding teams and the right problems, we haven't seen any slowdown in funding either. So it's been quite an exciting time overall.
Definitely. And how about Denis goes next?
So of course, Vietnam has been impacted by COVID. Vietnam has been very lucky because the government managed to have like very, very few cases. I think we had in total like 1,000 cases since the beginning of the year, so that's great. But again, that they have to sacrifice their hospitality industry. and therefore their real estate industry. So anything related to hospitality apps or whatever, or like prop tech or whatever, like it's not a good time. On the other hand, for the rest, it's business as usual. It has been a growing market and it's still growing very, very quickly. So this part is great. After, in Vietnam, there is a strong foreign exchange control. So it's difficult for foreign companies to invest. But I would say for people, for VC firm who are either local company investing here or a foreign VC fund, but already with a team, not necessarily a legal investment arm, but at least a team locally, they've been doing very well. And I think somebody was mentioning but like 500 startups. But I'm amazed about how many investments they've been doing this year in Vietnam. It's crazy, it's like 50 or 60. And of course it's small tickets, but still it means that I mentioned about like, that's true that many VC firms are sometimes not that cautious about the investment they do, but still, I mean, they look a little bit and it means that somebody somewhere say, okay, we can invest in those 50 or 60 projects. So it looks quite good. And so yes, it's the impact was quite unexpected because once again, we don't have COVID at all. And I think it's giving even more motivation, at least to local people, to build things in Vietnam. And I would say the startup scene is really booming. That's great.
Great. So I'll let Leon tell us about the situation in Indonesia, and then Philip can close this question off after he's done.
Okay. So let me quote Hillary Clinton from one of her debates actually against Donald Trump back in 2016, I think it was. So she said in the context of some attack from Donald Trump, she said like, when they go low, you have to go high. Okay, so that's the exact mentality that we also apply when it comes down to investing in technology in Indonesia during COVID times. Now, what do we observe from a government perspective? The government has understood that now is the time to issue and bring across groundbreaking new regulations to ease the labor market. Now it is less cumbersome to hire and to potentially also let go of folks if you were to adjust your workforce. Now it is more easy for foreigners to be hired into more sectors. It is more easier to get foreign direct investment at a meaningful majority position across a variety of industries. So that's good. Indonesia government understood the opportunity that COVID brings. Yeah, we see from global manufacturers and global companies that they are really looking into diversifying their supply chain across Southeast Asia. From Germany, for instance, German Foreign Ministry has issued a paper saying that German companies should be less focused on China as a manufacturing hub, but really looking into diversification across Southeast Asia. So that's a huge opportunity, number one. Number two, what do we see from our portfolio? Well, you know, there's the ones that do very well due to COVID and growth has been accelerating. Those is particularly everything related to commerce, logistics, everything related to education, doing very well. So these guys have been really accelerating their growth. They are then the companies that are doing okay-ish, where we make sure that we have still good runway remaining, and that we really now optimize workforce, and we really also cut down parts that might not be as efficient as we were previously thinking they would be. And then there are companies that are hit hardest. But even if we look into sectors like travel in Indonesia, Traveloka has been smart enough to understand that it was about diversifying their business model beyond just a travel search engine. So they really built up this sort of experience products in Indonesia itself that enabled them now to be at revenue levels of about 50% pre-COVID. And at the same time, having a good path to be by end of this year, EBITDA positive. So that's great. In terms of VC, so that's on the portfolio side. On the VC investment side in general, many investors have been more cautious. They were sort of applying a bit of a wait and see approach. We were very excited to double down now. So we closed our fund, next early stage fund, during the pandemic. We're closing our first investments with this fund during the pandemic in key sectors that we understand are just massive in terms of size and will prevail any impact that COVID might have on the economy. Having said that, from a macro point of view, Indonesia is predicted to go into a recession for the first time since 1998, since 22 years, with about 3 to 4% loss GDP year on year, but they will recoup, or predicted to recoup next year by growing at about 8 to 10%. So it's just a little dip, but we're still remain as optimistic as we have been when we started Kejora back in 2013.
Great. So yeah, we have about 10 minutes left. I'll let Phillip answer the this question, and then I'll have another follow-up on practical advice for MBAs looking to go into VC. But yeah, Phillip, how is the COVID situation in South Africa?
It's been really exciting actually for the service industry.
Having a little bit of trouble hearing you. Yeah.
Sorry about that. I'm saying the service industry hasn't been impacted that much. I've seen how most of them, their sales actually skyrocketed. Owing a lot to the fact that most people were trying to adapt to the fact that now they can work from home, they can request services from the comfort of their homes. Some of industries like the ed tech, the agri tech, travel tech, health tech, the e-commerce industry, fintech, green tech, screen tech, and digital services have been stable. But the commercial property and real estate have at least went down by at least 50%. I think last week I was in a meeting and then we talked about 60% of the commercial spaces in the city of Cape Town are not occupied, and most of the big corporates had to cut down their costs by 50% to survive. So which resulted in a lot of people losing their jobs, and most of them are shrinking their office spaces to encourage people to work from home. But when it comes to construction, it's been really weird. A lot of commercial developments have failed. There was one project that was discontinued due to the fact that their suppliers couldn't supply them with the building materials. And the question that was asked was why? So they couldn't continue manufacturing the building materials, so they had to discontinue their businesses. And then because most of the manufacturers actually import their raw materials, so they couldn't continue with that, which affected a lot of the commercial side. But in overall, most of the small medium enterprises, especially the ones that are not in the hospitality industry, have been able to pick up. They've been able to go back into business. But the hospitality industry, like most of the rest of the world, has been hit hard, especially the coffee shops. Not the franchise. The franchises have been doing pretty well because they've saved a lot of money. But for a standalone coffee shop, like a sole proprietor coffee shop, they've been impacted. Most of them had to go out of business. But in overall, judging according to all the industries that exist at the moment, I'll say at least 40% of them have been impacted, and the rest are starting to pick up. And what has also been growing is the trend now has been most of the people have been losing their jobs. Most of them now are trying to become entrepreneurs, which is really a funny one. They're starting to see how can I be self-employed? How can I use my skills? Most of them have become freelancers, which has also increased economic activity. Most of them have been trying to get 0-hour contracts. But yeah, in overall, I would say it's going in a positive direction. So it's not actually
Sure.
bad. It's not bad at all.
Yeah, thanks a lot. And so yeah, we have 5 minutes left. So the final question is a lot, most of this call, most of the attendees are MBAs, and we're looking, most of them probably have some interest in VC because they joined the calls. So the question is, what would be the path you recommend to getting into VC in the sort of countries you're working out of, whether that's starting out at a portfolio company, improving yourself, or by some other means? And Kartikeya can start out with this one.
Yeah, so I graduated from INSEAD very recently, and I made my way to VC. I think like any country, I think this applies to. VC is particularly hard to get into because the firms themselves are smaller and the teams are smaller in nature, right? So India only has a couple of maybe 8 to 10 really good firms, and then within that the teams are really small, and so it tends to be very relationship driven and network driven, as VC tends to be anyway. I think I would recommend any new MBA who's thinking about VC to really first question whether VC is really what they want to do. I think entrepreneurship would be a great way to get into VC, right? So I think if you either join a really fast growing startup that you're very excited about in a space that you're excited about, or you tend to start something on your own, I think that'll make you a better VC later in life, and also it might accelerate your path to get in there if you aren't able to get in immediately. If you still, want to apply to VC, then I think a few things you can do to stand out. One I would recommend is trying to build your brand. Today, it's very easy to, start a blog post about something you're interested in. So if you, for example, have worked in gaming, for example, right, you may have a unique insight on gaming in a particular market that nobody else does. And so whether it's tweeting or LinkedIn posts or a blog or a Substack or whatever, just to build your brand presence, I think is important. And the other thing I recommend is when you do reach out to VCs, rather than reaching out cold, if you reach out through someone you know, or more importantly, if you're able to share a thesis on a particular space that you know about and why, if you can add value to the VC while you're reaching out to them, I think that really helps. So whenever I receive something where someone has shown initiative by looking deeper at a particular sector that Blume cares about and maybe giving their own unique view on what companies are interesting in that space, that always helps. So those would be my two tips.
Great. How about Denis goes next and talks about his advice on a job search?
Yeah. So then I will be talking at the national contact of INSEAD in Vietnam, and what I've seen in other places, and been hiring few INSEAD MBAs in my career. First of all, is like, I know it's a difficult time, but especially for VC, you need to understand that there are many VCs which are not that visible. Of course, the big one, and you see them in the news, etc. But there are a lot of smaller companies, and you have the chance to be part of the INSEAD network. So there are really a lot of people in the VC environment. So sometimes you can go on the alumni repertory and you can find some people. I think the best solution is to go to LinkedIn and you filter INSEAD plus VC per country, and you will find actually a lot of people. And then you can connect through them. And what is very interesting is very specific to INSEAD, and it's really true. When you try to contact people from INSEAD, you have like 90% of response rate, which is really, really high. And once again, you should not go directly to them and say, oh, do you have a job for me? You should say, look, I'm interested by venture capital. I would like to know more about it. You have like maybe 10 or 20 minutes to give me to talk about it. And then it's a great way to I would say, to build your brand awareness about those people, so they will know you. And I can tell you that actually there are many small, it's just a perspective, but there are a lot of smaller VC firms between like 10 to 50 million, and they will be very happy to hire MBA people like you. I was still talking 2 weeks ago with a guy, a Japanese guy. I think he finished his MBA maybe like 10 years ago. He opened a VC firm like 3 months ago in Hong Kong, and he doesn't know what to do. He doesn't have people with him. He doesn't know where to invest. And there are people like that out there who will be very, very happy to work with you guys. I didn't mention it, but I'm helping like few VC funds to do fundraising. So do fundraising for them. So those guys, they will need people at some point. And it's the same, if you talk to those people now, then probably 6 months later, they will be very happy to give you a job. Same, I'm opening a venture builder in Japan next year. It's still very early, but it could be something. And I really like what you said previously, Kartikeya, is like, you need to be sure as well that this is what you want to do, because either you go on the entrepreneur side and this is difficult, or you go to the VC side and this is also difficult. And so I think it's great also that just discuss with people, former INSEAD student who are graduated 2 years ago, and ask them like, what is your daily life? How does that work? And that could give you a very good insight on this. Yeah.
Great. So it's 9 o'clock and a few people are dropping off because they have class. So I just want to mention before you leave that handover time is happening. And so us 20Ds are leaving and we will be handing the leadership over to the 21Js. So join the Emerging Markets Club on Telegram and we'll send you the details for the application to become a leader of this club. And yeah, as long as you guys have time, we'll have Leon and Phillip answer this last question before we conclude the conference. So yeah, Leon, go ahead and get your thoughts on this.
So I might say now something contradictory. And like, I would say if you want to go into VC, don't plan going into VC. VC is coming to you and not you're coming to VC, basically. Because the first and foremost thing that you have to, in order to be successful for being a VC, is to be passionate. Either passionate about an industry or passionate about a market. That's number one. If you're not passionate about this, then about the market. It's not about like, you know, investing or I'm like a finance guy. I'm not a finance guy. My worst grades were always in finance, FYI. You know, so just so when I started VC, like I was passionate about Indonesia. I was just working here with Rocket and building companies, and it was huge fun, and I knew I wanted to stay. And at one point in time, I just got a random call from Global Founders Capital. You want to invest? From like the CEO of Rocket, basically, and said, yeah, let's do it. So then I set myself on a plane to London, and I had like no clue about valuation and what to do and so on. But it's just about, you go now and find companies. And I knew like either I swim or I drown. And like, I just felt that I was so passionate about meeting and working with so many entrepreneurs and learning so much about different market segments that this passion made me realize that this is exactly what I want to do. So I don't think that you should judge like, oh my God, my finance grades are so bad, or I want to plan going into this particular VC. I think that's really the wrong mindset to have. I think the best mindset to really have is to show passion. And it might just be untangible. But if you really figure, oh my God, on a daily basis, I'm going on TechCrunch, on Your Story, on Tech in Asia, on Deal Street, on E27, I read all the news, I follow the trends, then naturally you're interested in tech. That's number one. Number two is then, are you meeting with other entrepreneurs? Do you have friends in your network? Do you brainstorm with them how their business is evolving? Are you going to like entrepreneur meetups and think about strategy of businesses? Do you think about public companies and what are business model opportunities and all these kind of things? If you realize that you're in your free time are actually researching about that kind of stuff, then probably it's good to explore. But I think if VC is not to plan, VC comes to you. Seriously. And yes, I completely agree with Kartikeya. I mean, great way is to build personal brand. It's a relationship game. It improves your chances of getting into the right VCs that you would want to, definitely. And I totally underline that. But at the end of the day, if you're not passionate about what you're doing and not passionate about tech, then no way VC is a right game for you.
Yep.
Great. And Phillip can close it out.
I'm just gonna add on what Leon said. Passion and love do matter when it comes to going to the VC. Because also it came to me, I wasn't out there looking to start a VC firm. But for me to penetrate the market started with business incubation. I have a business incubator. So I work with a lot of startups, and I see the kind of impact that I might have if I try to help the startup raise funds. It was not something that just came out of the blue. And another thing might be being really informed. A lot of people lose a lot of money because they lack information, they lack resources, they lack the network, they lack business pages. They just be like, oh, this startup is interesting, they just invest. And the nice thing about the VC firms is any investor can invest in a VC firm. So they don't invest directly into the startup. And with your money, the VC firm puts seeds in different industries. So your chance of losing all your investment is very slim because they have the expertise, they have the information. And again, not only the big VC firms have a lot of impact, but I really agree with what I think it's Denis said is there's a lot of hidden small VC firms that you never hear about. They just pop up when you want to raise funds. And they're also playing a major role in the ecosystem when it comes to investing in startups. And the other one might be loving it is really good. Most of the MBA graduates just want to start investing in startups without having interest in different industries. I'll also advise most of the graduates to try and learn, buy the books, follow the companies, especially the major ecosystem players like Google, and how is it that how do they solve the problems? Go to Crunchbase, research about a certain company that just went into a merger, follow the startup. How is it that they came to form the merger? Go watch interviews, But the most important one is the information. Have the information, then you have the power to say something in a board meeting, other than you just sitting there because you have the money. But also sometimes, talking about social entrepreneurship, you also need to be able to have passion in a certain problem that you think might be addressed. Investors are not only for profit. You have impact investors and social investors, which are really interested in solving social problems. Sometimes that's where your passion might be. Maybe sometimes your passion is in venture philanthropy. Just try and see if your investment is going to make a change. Sometimes that's how you figure out what is it that you love, what is it that you care about. But in overall, don't just jump into it. It will come to you. And some rely on collaborations. For the first time ever, we have big corporates that are interested in partnering and collaborating with small companies. So we are in a space now today where any company is open to collaborations. So you can always try to get the information from them and the networks from them, and that will make all the difference.
Great. Well, yeah, thank you so much to all of you for taking time out of your day and sharing your very valuable insights with us. This concludes the 2020 Emerging Markets Conference, and it was a really great time. All the sessions were great, but it was happy to end it with the four of you and learn about really EM-based VCs, which is something that I think doesn't get enough attention. So. Again, thank you. And the recordings will be put up on YouTube, hopefully by the end of this week. And I'll send all of you the link, and would love to keep in touch. And we will be handing this over, as I said, but I'm sure the team that takes over would love to have you guys back next year. So thank you again, and have a great night.
Thanks, guys. See you.